I think a lot of that wheat is going to get grazed.
Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. It's always a treat to visit with you about ag-related issues. Today, we're going to focus on this crazy cattle market and the entire cattle industry. All sorts of things going on and affecting this industry from all sides here. And to talk about it, I brought on, well, one of the most renowned experts I can think of, and that's Derrell of Oklahoma State University. And we're going to talk about the fact that we had the cattle on feed report that came out a while back. We had, of course, the big cattle inventory report that now, Derrell, only comes out once a year, correct?
Actually, last week, USDA announced that they're going to reinstate the July inventory report again. So it's been off again, on again on that thing. And we're glad to have it back. It's particularly this year because we're trying to get a handle on whether or not we're starting to save some heifers and so on. The problem is we get a report in July this year, but we won't have last year to compare to because we didn't get a report a year ago. So it'll be a little bit challenging to know how to interpret the report. But nevertheless, we're glad to have it back.
Gotta love working with a hide and seek USDA.
This is the third time it's been interrupted in the last 12 or 15 years. So it makes it really difficult to have a continuous data series when that happens.
You would think, you only have 2 of them a year to put out, only 2, You'd think you could do that, but
it's budget problems are an issue, but of all the things to cut, something that only comes out a couple times a year is pretty important. So anyway,
I mean, they have that thing called computers now that kind of speed things up a little bit. But anyway, no, I'm glad to have you on board here. Of course, the markets have just been all over the place here lately. One thing that a lot of traders have been talking to me about here lately, and just kind of expressing concern over is, are we getting the feeder cattle in from Mexico? What's the latest here? And I think you have a chart here that we can maybe delve into that a little bit. There had been concern about that, I guess you call it the New World screwworm that was preventing cattle from coming into the U.S. Has that been rectified? Will it be rectified? Where are we now on that?
Yeah, well, and when Mexico announced last fall that they had detected New World screwworm in southern Mexico, the U.S. closed the border to all livestock imports for a time period. We now know that opened back up in early February. As far as the New World screwworm, they're still working. It's going to be a lengthy process to try to sort of beat that back down. That we had been trying to hold the barrier at Panama, and it got away from them in Central America and then made it into southern Mexico. And so now it'll be a multi-year process probably to try to get it under control and hopefully get that reestablished. But in the meantime, the protocols are in place now so that we feel safe, with the additional steps for exports from Mexico to allow those cattle back into the U.S. And so this chart shows you, the dotted line was 2024. And so on the right side, you can see how it dropped to 0 the week before Thanksgiving when we closed the border. And then there were no cattle imports until the first week of February. And you start to see that blue line then emerge. It's been a slow process because of the extra protocols, because of personnel limitations and so on. We're slowly building back up to kind of normal volumes, but not there yet. And so in the meantime, there's a bit of a backlog of cattle down in Mexico that were planned to be exported and have not yet been able to get across.
Now, before we came on with this recording here, you and I were talking off air for a little bit, and there's kind of a unique angle on this that I guess I wasn't really aware of, and that is related to the fact that cattle that come out of Mexico have to be spayed before they come into the U.S., but that's causing all sorts of complications. Can you walk through that a little bit here?
Yeah, so first of all, we normally don't get a lot of heifers in the mix. If you look back over the last 20 years or so, about 19% of the total imports each year has been heifers. They come in as spayed heifers, so they're not for breeding. They're feeder heifers. And, but normally it's a fairly small percentage. However, in 2024, before we closed the border, about 37% of all the cattle we imported were spayed heifers. And that's indicative of some other problems in Mexico, namely the fact that they've had 2 years of very serious drought in northern Mexico that's causing them to liquidate. And so they were bringing more heifers. The problem is, or the challenge is, that the protocol for importing spayed heifers says that they have to be spayed, they have to be healed up. So it takes about a month to get them ready to export after that, but they have to be across the border within 180 days after the spay surgery. And so there's a fairly narrow window. It amounts to about a 5-month window to get those heifers across. And so heifers that were spayed last fall in September and October getting ready to export, then the border closed. And in some cases now those heifers are sort of running out of clock, and they're having to be marketed back into the Mexican market because they run out of time to get them across the border. And that's part of the urgency with this backlog at the border, is trying to get those heifers caught back up. The steers don't have that same clock, so there's a little more time there. But again, they're in a drought in northern Mexico, so holding on to those animals, waiting to export them, is very, very expensive and very difficult for them right now, because they have a serious shortage of feed availability in northern Mexico.
Elaborate on that a little bit, if you would. We've been talking about that quite a bit here lately on the Comstock channel, about the fact that there are increasing fears of drought, especially in the southern plains. But I know that, we had heard from Eric Snodgrass at Commodity Classic a while back, and he talked about the fact that a lot of times when you have significant drought in the U.S. plains, it originates in northern Mexico. And you were telling me that it's pretty dire down there right now.
It really is. I was in Chihuahua, Mexico a week ago, speaking at their annual cattlemen's meeting there in the state of Chihuahua. And the situation is really very serious. They've had 2 years of not much more than 50% of normal rainfall. And the state of Chihuahua, on average, only gets about 16 inches of rain a year anyway. So it's very, very arid there. And so they're in an extremely difficult situation. They have been having to liquidate herds. And some of those cows have relocated farther south in Mexico. Conditions improved a little bit last year in central Mexico, but that northern region is a big beef cattle production area, and they're very serious. So, we were on pace to get nearly a record level of feeder cattle imports last year. Again, partly driven by that drought and the fact that they were getting rid of heifers. Going forward, we probably will see imports drop back, not only because the border was closed early in the year, but also going forward, they just won't have as many cattle for a while. And so I expect to see a relatively significant decrease in total imports for the rest of the year, assuming we don't have any additional disruptions at the border.
Well, to me, that would seem to indicate that Mexican cattlemen probably have a double whammy that they're contending with. If you're talking about a droughty condition, and maybe having tariffs slapped on your product as well coming into the U.S.
That's exactly right. They see it as kind of getting hit from all sides, really 3 sides, right? So they had the drought that was already being a big challenge for them. The screwworm issue and the border closure compounded the challenges of managing through that, and now we're facing tariffs. And so, they're really facing a lot of very challenging conditions right now.
Well, of course, here we are with extremely high retail beef prices here. The cutout market has never been higher, really. Maybe there's some adjustment here recently, but I don't know how that's going to clear itself up. I think you have a graph here. It's related to the difference in prices between different classes of cattle. Let me bring this up here. You provided that here this morning so we could take a look at it, but it has to do with fat cattle and also feeder steers in the marketplace and the spread between them. Explain what we're looking at here. This is fascinating.
Yeah, so this graph really gives you a nice historical perspective. The blue line would be a calf price, so it's 500-pound steers. These are Oklahoma-based prices. The green line is the heavier weight feeder cattle, so these are 800-pound steers. These are monthly prices going back about 15 years. And then the red line is fed cattle, the 5 market average price. And so, you can see on the right side, of course, where we are now. We're at record price levels as we've built into this. And it sort of mirrors a little bit what happened about a decade ago. You see that what were then record high prices in 2014 and 15, and both were caused by droughts. But there are some important differences in those drought conditions then compared to now. It was relatively short-lived the last time, about 2 years of high prices. Now, we're already 2+ years into this, and I would argue that we've not seen the peak in prices yet, and we haven't really started any herd rebuilding yet that would lead ultimately to a top and then some lower prices on the backside. So that's part of the story here. The other part of it that this really illustrates very well is that when those prices go up, the lines get farther apart. To put it in a non-technical way, the blue line, those calf prices go up farther and faster than the feeder cattle prices, and the feeder cattle prices go up farther and faster than the fed cattle prices. And what that really illustrates is that in this market, the market signals are really oriented towards the cow-calf level. Those high calf prices are an incentive to save heifers and rebuild the herd. And so that's kind of the market focus right now. But when those calf prices get high relative to feeder cattle prices, it means that stocker producers actually face a margin challenge. Their buy-sell margin gets squeezed pretty badly. And the same thing is true for feedlots at the next level. So the feeder cattle prices go up faster than the fed cattle prices. And so what it means is that everybody above the cow-calf level that's a margin operation actually faces a margin squeeze and lots of challenges with those margins in this kind of a market environment.
I have heard of astronomical prices being paid just for bucket calves in a sale barn.
Yeah, and the place we see that the most, of course, is on these dairy crossbred calves that have really become utilized in the industry the last few years. And so these, you can see a 2-day-old dairy beef crossbred calf, particularly up in the Northeast, in the more dairy areas. Those calves are bringing anywhere from $800 to over $1,000 a head at 2 days of age, 80 pounds, which is just sort of mind blowing in some ways. But it speaks to the real shortage and the tightness of numbers on the beef side, as well as the new potential for these crossbred calves.
But at what point is the consumer just going to walk away from the beef counter? Because the economy is not doing all that great right now.
Well, I up until now, we've been watching it for 3 years, wondering if there was a top here. We haven't really seen much pushback from consumers yet. Beef supplies haven't dropped as much yet as they will at some point. We're going to see tighter beef supplies, which is probably going to keep these retail prices high and there'll be less beef. So some people are going to eat less beef because we're just not going to produce as much at some point going forward. We don't have the cattle, but at the same time, those prices will stay high. However, beneath that, consumer demand has been extremely robust. I mean, there's lots of pork and poultry out there if consumers wanted to turn away from beef, and they really haven't yet. And part of that speaks to the fact that the beef industry has really improved quality over the last 10 to 15 years. We're routinely on average now marketing 85% or more of our beef is choice and prime beef, choice and better. And, that's up significantly from what it would have been, say, 15 years ago. And so quality really shows, the consistency of that product is better, and consumers have rewarded the industry with continued strong demand.
Well, how are we doing on imports? I mean, that would relieve some of that price pressure from the consumer point of view. But are there any imports that can be added to come into the U.S.?
Well, beef is not one thing. It's thousands of different products, right? And so beef trade, both exports and imports, are specific product flows for specific markets. So about 60 to 65% of what we import, they have increased, by the way. Imports increased in 2024 about 24% on a year-over-year basis. But about 60 to 65% of those imports are processing beef. So they're basically lean trimmings or lean product that we use in our ground beef market. And that's the biggest place they supplement. And that's very important, because the thing that has changed the most in the U.S. industry up to this point is the fact that cow slaughter has dropped sharply. So our supplies of lean beef, if you will, the non-fed beef that supports our ground beef market has declined. The imports are helping to moderate that loss or that deficit of lean beef production, even though we do have lean trimmings at record high prices, and ground beef is relatively, it's still the go-to product for consumers, but it's really not. It's not a cheap alternative at this point. It's also at record levels, basically.
Well, because of the economy, I see a lot of fast food restaurants really kind of shrinking their menu to get the prices down, but a lot of them are offering these little mini hamburgers, basically, little junior sized burgers that
Right.
I'm sure the patty is about the size of a silver dollar. I don't know how much more of that they can do either.
Yeah, that is the one place where we have seen a little bit of a response, if you will, from the consumer side. Fast food restaurants raised their prices probably as aggressively as anybody, and there was some pushback. So they have worked hard in the last few months or so. We don't have dollar menus anymore, but we've got $5 menus now, and so they've come back a little bit with some value-based packages, trying to retain those consumers because that ground beef market has been so tight. So there's a little bit of change there, but again, overall the market has stayed remarkably robust up to this point.
Well, I hear a lot of talk, Derrell, about the difference between the feeder cattle prices out in the country and what the futures prices are doing. I wanted to talk with you about that for a little bit. Here's a chart that you had put together explaining what this is all about. That looks pretty wild.
Yeah, when we try to relate basis or futures markets, excuse me, back to various cash markets, of course, we have a whole constellation of feeder cattle prices across different weights. And the feeder cattle futures contract is based on 700 to 900 pound animals, basically. So that's what the contract specs are. But we use that also to try to relate to these lighter weight feeder cattle. And as we saw in that price chart a little bit ago, the calf prices have gone up farther and faster than the feeder cattle prices. So when you subtract the cash price minus the futures price to get a basis estimate that you would use for your risk management programs, this chart really illustrates how that basis is quite variable for those lightweight animals that are really outside the contract spec. So this is 400 to 500 pound steer price minus the nearby feeder futures, and that's the blue line. And you can see when the prices go high cyclically, like they are now and like they did about a decade ago, the basis just gets wide. The feeder futures certainly don't go up as much as the calf prices do. They stay this, they do go up, but they stay based on the heavier weight feeder cattle. So the red line here is the basis for a 700 to 800 pound steer. And again, even though the price levels are changing, the basis is fairly predictable and stable for those bigger feeder cattle that are within the contract specs. But for the calves, the basis is quite variable. That means if you're trying to use the futures market or something like LRP for risk management on these lightweight calves, it gets a little tricky because the thing we count on when we use risk management tools is having a stable basis that we can count on, that we can anticipate. And in this kind of a market, the basis for those lightweight cattle gets much more unpredictable.
Well, you were just telling me before we started the interview that things are really dry where you are in Stillwater, Oklahoma. I thought maybe you had caught a few rains, but apparently not. And now a big question among traders is, did they graze out the wheat in the Southern Plains in favor of walking it off the field? What do you hear from people out there in that part of the country? Did they take them off of the grazing field by the deadline or not?
I think a lot of that wheat is going to get grazed out when you look at the wheat market conditions. And now we didn't have huge numbers. We had trouble getting the wheat established last fall. We didn't get off to a good start for winter grazing, but we did eventually get some cattle on. And most of the cattle that came on late was with producers that had already made the decision that they were going to graze out that wheat. So as I drive around, I do see cattle still out there. We're clearly past the, what the agronomists call the first hollow stem stage, which is when you have to get off if you want to retain any grain yield. So any cattle that you see out there now are clearly in graze out mode. And we are doing some of that in the Southern Plains. And as you mentioned, we had a little bit of rain earlier, but it's gotten very dry again. Temperatures are warming up. The winds are blowing as they usually do this time of the year in the Southern Plains. And so we've had lots of issues with wildfires. The conditions are deteriorating pretty rapidly on a daily and weekly basis. And so, and the forecasts are not particularly promising for this springtime period. So I think the question of drought and drought threats for much of the central part of the country in terms of what we might be trying to do relative to, say, heifer retention, I think the drought is going to continue to provide a lot of caution for producers to not get too aggressive too soon until we see what our forage conditions look like for the summer.
Well, Derrell, unfortunately, that reminds me of 4 to 5 years ago when we went through a similar situation, and that caused a lot of herd owners to liquidate just because they didn't have good pasture ground and they were running out of feed. I mean, is that possible again this year?
Yeah, it is. And in fact, the reason we have record high cattle prices today is because we've had now most of 4 years of drought. It's kind of moved around the country. And so different regions have suffered depending on the year, but really it started in late 2020, but 2021, 22, 23, 24 have all been droughty somewhere sufficiently to cause liquidation. That's how we got to where we are. And also to kind of keep us at bay, if you will, because if you look at the current drought map, we don't have serious drought, but we have marginal drought conditions in a lot of regions. And at this time of the year, those drought conditions can advance very quickly with warmer temperatures and the windy conditions that we typically have. And so, so the threat's still there. We could see additional liquidation. The annual inventory numbers look like maybe 2025 would be the low for the beef cow herd, but it's not a for sure thing at this point. There is definitely a threat that we could go lower still and push back any possible herd rebuilding another year to even begin, let alone see it through to actually completing any significant growth in the herd.
Wow, that just seems crazy. Kicking the can down the road yet another year. Wow.
It really could.
Never thought I'd live to see that.
When you look at where we are with heifer numbers at this point, if we save a heifer calf in 2025, assuming that we have conditions that would suggest that you should do that, we save her in 25, we can breed her in 26, your calf in 27. We're talking going into 2028 before you would see any significant change in beef production. So we're already looking basically at the end of the decade before we can turn this battleship that is the cattle industry around. It's a slow process, and that's under good conditions, and we don't know yet whether we're going to have decent conditions or not.
Well, I sure hope the consumer understands that and has the patience for it.
It's going to be a challenge.
Oh, Derrell, thank you for all the information. I always enjoy talking with you about the cattle industry and always great information. So look forward to talking with you next time again. You take care of yourself, and I hope you get the rain you guys need out there. Good to visit with you again. I appreciate that very much. Derrell Peel of Oklahoma State University with us. That'll do it for this episode, and thanks again for watching. For producer Breanne Jenkins, I'm Marlin Bohling. We'll catch you next time right here on the Comstock Channel. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.